A lot of you may not be excited about this, though. It's tax time. And of course, you want to get as much of a refund as you can, but there are 5 commonly overlooked tax deductions. Thank goodness we have Stricklin from Wise Wealth here to make sure that we know what we need to.
It's a great time of year, isn't it? The tax code is over 70,000 pages long.
Wow, 70,000 pages. Who has time to look through that?
Yeah, I know. I was going to send it to you this week, but that definitely was out of my budget to send that to you. But somewhere in the 70,000 pages, there's deductions, there's credits for taxpayers to get the most beneficial tax credits that you can get. Most people know about the mortgage interest deduction, charitable giving tax deduction, and IRA deduction. But what most people don't know is there's 5 commonly overlooked ones. One's for going green.
Going green, okay.
Going green.
What does that mean?
The most important thing about going green is that you actually get a tax credit, not a tax deduction.
A tax credit?
That's right.
Okay, now what's the difference between the two?
Very good question. A tax deduction is an amount that you deduct from your income to determine how much taxes you pay. A tax credit is a deduction from the amount of taxes that you owe. So for most people, a tax credit is more valuable than a tax deduction.
Sounds like it. What are some of the things that we can...
So for going green, you get a 30% tax credit for installing energy efficient systems like a solar water heater. No limit on the amount of deduction you can get, but you also can get a 30% deduction for installing new windows, storm doors, insulating your attic, that kind of stuff, up to a maximum of $1,500.
That's great. What else?
So you have a deduction for going green. Another one most people miss is for investors. A lot of investors pay attention to their money, but they don't realize that investment advisory fees, publications that you get for investing, driving to and from your financial advisor's office, all that stuff is tax deductible.
No kidding.
And safety deposit boxes.
Okay,
huge.
Another good tip. What else don't we know?
And also your fees for paying your tax advisor. If you pay to get your taxes done,
you can deduct it.
You can deduct that. Another one is for homeowners. A lot of people deduct their mortgage interest deduction, but they don't also know that if you pay PMI, private mortgage insurance, you can deduct that. Also, if you were one of the fortunate ones last year to be able to sell your home, any real estate commissions you paid, any closing costs associated with the sale of that house, you can deduct that as well.
Closing costs you can deduct.
Then there's the state income tax deduction. If you pay state income tax, you can deduct that from your federal income tax this year, if you paid last year, or if your sales tax, if your state sales tax is higher than your state income tax, you can deduct that.
All right, give us our last 2 very quickly.
And the final one is for volunteers. If you work for a charitable organization, any mileage you go to and from working directly for your charity is deductible. But also, even if you made blankets for a shelter, or you made you made food for a food pantry, that kind of stuff is deductible against your taxes.
All right, helping us save money today. I appreciate it.
You're welcome.